Hello guys, glad to have you on board again. Today we're Tuesday, so usual beginners level podcast talking about ranges, but not necessarily just about that, just giving you somehow of a framework to work with in order to safely progress step by step toward getting an intermediate trader. So even though we are narrowing the field of action in here by concentrating to the early traders in there and along the community, there are still many different profiles. What I tend to say is generally going from beginner to intermediate can somehow take just a few months. For some people, will take 6 months to a year to other traders. So it's not a race. It's really important that you figure it out. You're only racing versus yourself. So if you try to put yourself into some stupid competitions with others, like maybe I'm too slow, others are progressing faster than I do, so I'm not good at it, or that's definitely not how you should think. Everyone can make it, and those who try to make it the fastest are not necessarily the one that will eventually even succeed one day. Like I said, it's not a race, and you're not racing against time. You're racing against not losing money, and doing it fast, for the experience I had, generally means losing it fast as well. So really don't try to rushing things is the best thing you should do. At least the best technical approach. Trying to understand the market is absolutely normal at your stage. So don't try to fight nature. Like I said, these are natural biases that every human being has. Like I said, letting your money into something you don't give a shit about and don't understand is simply not possible for any rational human being. So facing uncertainty and chaos is absolutely normal that you have stupid reactions out of this. It just can't be rationally put in motion. The only way is that you're going to have to learn how to get out of this, because it's not compatible with trading. You can't trade with the fear of uncertainty. So that's the thing we're working on in the background around your personal psychological stuffs. And I told you that in getting into those areas generally means that the mistakes you guys do, you guys all do, are generally all the same. Certainly circling around those uncertainty biases, but most of the time you're just willing to get what you don't need. Like, you really need to differentiate those two things, what you want and what you actually need. Knowing that most of the time they're just opposite things. What you want is the opposite of what you need. I can't really explain that. It's just out of the many peoples I've been helping or coaching in trading in some different ways, I always got to this conclusion. Most of the time what you want is the exact opposite of what you actually need. What you need is what will make you progress, like make you just cross one step ahead instead of one step backward. And what you need is generally what will make you stand still. So it feels good to stand still, but this is not what you need to do in trading. Constant movement is absolutely necessary. Sometimes you'll move backward because that's inevitable, like making mistakes and stuff like that, all right? Or even not making mistakes. Like I said, sometimes the market will simply not work it out the way you expect it to do. Even though it's painful, it can be all of those stuff, and it is right now for me. You think it's easy for me to try to catching up the top in Wall Street when those guys just flush out every bearish move? No, it's not easy. It's definitely not. But I got through this long time ago, and I hope you will ever get to cross those steps again. So figure this out. It's really important that you differentiate those two. Whenever you want to do something, just make sure that this is something you need, not necessarily just something you want, because the difference is deep in here. So let's give a quick example. Yesterday, someone came to my house. So it received a message from a white people among the French community who was basically seeking for the framework password. So the first answer he gave him is like, what the hell? I mean, you're a white people, so why would you even seek for the password? The people just gave a simple answer like, I think it's going to help me identifying context to find better range context. That's not the point. All right? Once again, that's what that guy wants, certainly not what he needs. Why the hell would you need to have the expert level trades as you're still trading ranges? Yeah, it might look simpler and easier for you to figure out the range trades having the blue and red square signals. But truth speaking, does that actually change anything? No way. Most of the time, if you wait to have reversal signals validated and detected by the indicator to take a range trade, then you're going to miss a shit tons of range trade. Because the algorithm is just an algorithm. It's certainly not perfect. It's losing and missing a lot of trades. So, if you're waiting for the algorithm to confirm, and you're going to lose, not necessarily lose, but you're going to miss a lot of trades. And there are not that many range trades. So you always want to work it out. Put a lot of efforts out there. It's not that much work, and moreover, in here, what you want and what you need are definitely opposites. What you need is to be able to identify those reversal contexts and stuff like that, not to trade them. Because the problem is to identify those things when we're real time. Like, what's really complex with a reversal trade is when you are like this, all right? You're there, the market goes up, and you have to face it and go on the opposite direction. That's really freakingly complex. And in that perspective, yes, the algorithms can help. They can provide a little bit of support, algorithmic support, but no more than that. These are not signals. These are alerts, historical alerts, and you really need to understand that. That difference is absolutely key element in here. But moreover than that, the thing is just having those square signal makes things easier, but definitely not better. Those things, like I said, might be hard to figure out in real time. This is why there are visual helps and stuff like that. But when you're scrolling back in time, you see where the market reversed. All you have to do is to check the conditions, the technical conditions back then, to figure out if yes or not, this was a potential reversal trade. And when you see a reversal trade, you know it's about time to catch up the trade afterwards. The range trade that may follow. It's as simple as that. You need to be able to understand how trend works to profit from ranges. But you simply don't need to really control trend systems. All you need to do is to see them backward in time, to be able to highlight them. You know how this is. It's not really complicated. You feel like trends are always having the same structure. You always figure out a breakout. Sometimes it won't be detected because the algorithms are not perfect, but you'll visibly see that the market is accelerating. It's always followed by this divergence, pullback, and final excesses. Most of the time, I would say 80% or 90% of trends are following these guidelines. So, yes, that still leaves us a 10% of chaos, and you'll have to deal with that. Simply can't erase those. But most of the time, you should be able to highlight a trend and its maturity. You're going to make mistakes, but that's no big deal. It's by practicing and making mistakes that you'll get better at it. And the day you'll be able to fully identify trending maturities backward in time, you'll get slightly better at identifying them early on and eventually further away as they go on real time. And in these moments, when you'll get there, this is where you can ask the password. When you figured out that you think you're mature enough to try trading those trends, meaning that you're really mastering ranges and you're getting better at trend identifications in closer to real time, then go ahead, ask for the password. At that given time, this is what you need, not necessarily just what you wanted. All right? So I hope you do understand that thing. It's not to... I would say it's not a sentence. It's not something to slow you down in the process. It's most likely that if you want the password too soon, you're not helping yourself, not at all. And most of the time, you're going to stand still because these things are going to make it easier, but certainly not perfect. And in those perspectives, you really need to do this all by yourself first. The algorithm isn't help. It's certainly not replacing you. Otherwise, I mean, I would be trading 100% automatic for years. I told you, I tried. It doesn't work. It simply doesn't work. Or at least not sufficiently enough. I mean, it doesn't worth the risk. That's what I would say. Like letting an automated trading system working 7 days a week. I mean, I don't know. All I know is that the market conditions can just a little once in a while get out of control. And if at that given moment you're trading, you can end up being fucked. It's betting on your future for what, 5 to 10% a month? No way. I can make better by just working a bit. So why the hell would you give control to an automated system? It simply doesn't worth it. But that's a topic for another day. So let's try to figure out a few ranges and a few examples. Like, always figure out, like, does that look like a trend? Certainly not. So you need to zoom out. Remember that what you deal with is either you deal into ranging complex system, which are currencies. Anything on top of weekly to monthly chart is just ranges, all right, on currencies. On some market, like stocks and stock markets and stock indices, you'll have backward trend, bullish trends, all right, for many reasons. Just like I said, assets are meant to create value. Indices are meant to represent those who create that value, which means we take the best ones, we pull them all together, and how do you even think that kind of indices can go downward? They just can't. They're just the best of what's made out there. So just take the Dow Jones. So people are stupid enough to think the Dow Jones can someday crash entirely. No, it's just the 30 best companies in the fucking US. So it's always going to rise up. When someone is underperforming, we just put it off and put some better asset in there. So it's just always going to go up because of the underlying structure of the Dow Jones. But obviously we don't replace stuff each and every morning, or otherwise it would be too simple. But that's how it is, all right? We just take the best, and yeah, the best is always going to rise. And anyway, stocks will always going to rise as long as we do live into an inflationary background system, though it depends on monetary policies and stuff like that. But you need to be aware of those things. It's simple as that. So if you want to trade ranges in bullish trends, make sure those bullish trends are mature, or try to exploit the pullbacks and stuff like that. So we have a potential end of trend in the US, but potential simply doesn't make it until we validate it. Like I said, so far it's just not working. We are in potential reversal areas, but it's just not confirmed. It just can't. So far we can't confirm it. So until we do, you got to stand by as beginners. You can catch short-term pullbacks, but let's give it an example. The 1 hour trade is complex right now. But I think it's great for you as an educational purpose because it's complex. It's complex even for me. When you're facing this, what do you think is it? What do you think that is? The difference between you and me. I'm an experienced trader. I'm dealing with those contexts. I'm trading them. You just can't. Just like I told you. Wait. In the US, you've got nothing to do but to wait. Because right here, right now, all we have in here is we don't know what that is. This could be a final excess, and in that perspective, this would have been the pullback trade. Let me just catch it, sorry. So this would be our pullback trade, but try to remember what the rules are for the pullback trade. Normally, you're supposed to retrace 23% at least. I don't think we've done that. In here, we certainly haven't been reversing to 23% Fibonacci's. So even if you had ranging context signals, we can still be right onto the trend breakout, waiting for divergence. Even if we were divergent in here, we were divergent in here as well, we're still diverging in here, but in the meantime, straight lining. So we're waiting for the divergence trade to set itself, but how do you know you've confirmed the divergence trade? Just think about it for a second. It's something you already know, but some people just don't apply this, as this rule is really important. That's the key elemental difference between what I do and what you do. I trade real time. I take risks of being wrong. You assess backward in time, which means you have the luxury to validate the things. Remember that when you're highlighting context into current trending system, you don't give a shit about what happens right now because you don't try to profit from this. What you care about is when you get to the next step that you can make sure that the previous one has been done. So what's the next things you're waiting for right here, right now? I am trading. I know this is complex because I'm not certain that we're not going to be eventually just doing a pullback trade. I'm not even certain that we're not going to just keep on pushing this way and with that stupid linear pace. I don't know. Though I'm taking risks, though I'm ready to take losses, it comes with risk management and stuff like that. All I've got is a taking profit structure here, so it's definitely not the best case scenario. all right? I know about that. You don't. That's why I can trade those things and not you. But all you can tell is that what matters to you is reaching out 23%. So when we get there, you can be sure that this was the divergence, or if not, then that was the final excess. But anyway, as long as we don't go at least 23% Fibonacci, you don't even look at the range trade that may follow. If we do get 23%, then yes, you're fine. If we don't go down this road. That's the reason why I told you be really, really cautious with Wall Street right now. Some people are trying to catch the range trades, but if you're doing it in a 1 hour context, which I think is the most explainable, the clearest one right now, be aware that this one is real complex. We don't know yet if this is just a forthcoming pullback, therefore we're going to have to go higher because pullback is certainly not the end of the trend, or this was just an ugly way of pullbacking, not even retracing because of the low volatility and stuff like that, which I tend to believe because, once again, all indices are working along together, and you can clearly see that everyone's been working this area more or less in terms of amplitude, like the NASDAQ, been barely retracing here. The Dow Jones has been making a deeper pullback in here. So this is the reason why I tend to believe that something's been done in here, but it's hard to say. All right, I can say it in a global in this perspective, but it still doesn't come without danger. So yeah, what I would say instead is that this is definitely the kind of trade you want to take. So just figuring out if you wanted to sell the US on a 1 hour time frame chart, which one do you think was the best? Just scrolling those three. Yeah, this one would have worked as well. In here, these are typically the type of range trades you can take. That certainly doesn't mean that, I mean, you don't know. You'll eventually be dealing with a pullback trade, but even if that ends up being that, I mean, normally you're fine. It was getting in, being secured, so normally in here you're no longer risk taking, or at least a tiny bit of risk. So yes, these trades were fine. I stand on this, we're probably ranging in Wall Street, but the question is how long can we range before pushing higher, because the market wants more gains, and there are very few sellers out there. So yeah, I would say it's a limited time offer that we do have right now in Wall Street. So if you're already in, normally you're no longer risk taking, but it's not about getting in right now, all right? It's more about letting it go and to see how far we can go. And if we just can't, and if we break the resistance, then we have to stop and start again. That's how it goes, all right? Let's try to figure out all the context. Euro dollar, GBP, all of those things, I mean, anything surrounding the dollar is interesting nowadays. Let's figure out this one. I think this one is interesting. That's something we've been dealing with as well with the French users, so I owe you the same. So let's wait for the indicators to plot. Maybe a bug. It is, god damn it. So when these things happen, all right, a calculation is timed out or whatever shit that is, you just scroll to another time frame, then go back to the previous one, or switch assets. But you just like switch the chart, and it will refresh. So what happens in there? All right, it's fairly easy. I don't really need that alert anymore. All right, so what does that look like? This is something, I mean, if you want to trade this time frame, and I suggest you do, you can do another exercise, which is pretty interesting. And this is something that you don't want, but this is one of the things you need. If you're, for example, trading from 1 hour to weekly, for example, all right, take an Excel sheet and just put it in all the assets you're following. Make sure you don't follow like 20 assets like I do, or even more than that. Just stick to the essential. As you're a beginner, you should take care of 5 to 6 assets at best, no more. And you build yourself a grid of those assets and those different time frames. And you might want to update that table as you identify different contexts. Like you say on the IH1 context, this is what I want. You can put a blank answer in there. If you don't know, it's no big deal. All right? And sometimes this is just noise or something you can't figure out. Don't try to put sense to everything. Blank cells is absolutely normal in that tab. All right? But in here, for example, if you would answer, if you would have to give an answer to this, what does that look like? You see a breakout, market really clearly broken up. You see the divergence phases. We're pulling back. We finally got to 23% fib in here, all right? And now we're pushing further, all right? So we've made somehow the two sets of waves consolidation structure. Pretty much looks like a pullback. It's a very long pullback, but it looks like a pullback. So in here you would say very likely pullback trading in here. So you're trying to support prices out of Fibonacci areas. Like this is 23, this is 38. So you're trying to support prices in here. And as you see, we've tried to break this one down. And now we're trading on top of it. So this could be a very huge support we're testing right here, right now. We got bullish signals in here. So yeah, I would say this is probably bullish right now on GBP/USD, not necessarily crazy bullish, but if that is a pullback, then we're likely going to go for a final excess, which means just making new highs. If we don't, then we're probably going to seek for 38% fib, and there will be a pullback trade in here. Not something you trade, something I will eventually trade. All right? This is important for you to make that difference. You'll get there someday. Don't try to rush it. Okay? Though, any fucking way, what do you care? It's nothing you can profit from. So just let it go. You write it down, potential pullback, waiting for final excess. And once the final excess is done, you'll wait for the market to pull back to the support context, and only after you're going to try chasing the range trade. So it's a lot of if and if and if. So you're many steps away from a potential trade. So anything you know in here is that it's uninteresting for you. But still, you've made your analysis. You've been figuring out context you don't necessarily trade, but that's important for you to be able to highlight. And that's the difference. If I just gave you the tool, the magical tool that will say, all right, this is the trend breakout, so you're currently in pullback, then what is your fucking job? And do you really think an algorithm is capable of it? Remember what I told you, algorithms, any way you try to put it, will never be perfect. They can be good, they can be useful, only if they're rightfully targeting what they're meant to be doing. That's what I do instead of what others coders do. Not all of them, there are some good coders out there, but most guys, they just code what they want, not what they need, because they're just answering the wrong problems. Just like I told you, these things are here to assist, helping you identifying context and confirming, but you need to be able to highlight them on your own. You always have to back check the indicator. Whatever information they provide is certainly not a fucking signal. It's something that you're going to have to review. It's an helping tool. Help means you know how to do it on your own. It's just helping you doing it better. Simple as that. All right? So remember that. Yeah, seeking for the passwords too soon is generally a wrong question. Like you're facing a problem, but you're facing it the wrong way, and thinking that the algorithms may help you solving the problem is just false friend. Let's do the exercise with Eurodollar, for example. This one is freakingly complex, but what the hell will we face on a 1 hour chart? Give it a second to plot. All right. So for example, what we have right now would be, does that look like a trending system? It's not necessarily hugely trending. We can see a breakout attempt. In here it might be a breakout, but even though we're testing back the breakout, so it's a very slow breakout if it's one. I doubt it's actually a breakout. I think this is just in here it's not a clear trend. So as the trend is not following your guidelines, zoom out and you'll have the answer. If you can just put a label on something clearly, then zoom out and you always have a better picture. And then and there you can figure out what the hell happened. All right, remember always to scroll. We're coming from the resistant context. Don't have a look at the comes and goes, at the early swings and the price noises. Just stick to the essential. All right, we want from the resistant context to the support context. From the support context to the resistance. Oh my God. All right, and prior to that, the last time we were in the resistant context was pretty far ago. All right. And how did we go in between? Was this a trend? No, it doesn't look like. All right, lots of noise, lots of pullbacks. Don't look like a trend. So it's a three-wave bearish structure without overlapping. All right, which means in here this wave got into this wave territory. So this was a range move. We're probably retracing the other way. So that explains everything. We're just ranging on Eurodollar, yet we're probably going to go higher. All right. So you're waiting for bullish ranges right now. We were bearish ranging. Go for bullish range. Though you know that 61% area with the context going up, that's exactly what we want. It's simple as that. It's really that simple. All right? You need to first wait to get at least 61%, hopefully trading in the context, and that's it. You've got your answer. Does that mean that this is what's going to happen? Who knows? I mean, do you really think I know? I don't know shit. Future will always be unpredictable. All you do is that this is chaos out there. Just try to use a structure in chaos. At least you've got something in here. What's important is that something comes out of a set of rules that is a strategy system that has been that is not changing. That's what's important. If you change the process, you just lose it all. The risk management comes out of repeating the same old stuff all over again. The same set of rules. Sometimes they work, sometimes they don't. Anyway, it's always more profitable than what you're going to lose. It's just as simple as that. At the beginning, you're still not going to make money. I told you you're going to make mistakes. You're going to forget. You're going to bend some rules or stuff like that and destroy the risk management associated. But anyway, normally at that stage, you're still making profitable trades to cover the losses. So you stop losing money, which just this is something. I mean, so many people are just there losing money day after day. I mean, at least you're not doing this anymore. So that's pretty great. It's still not yet reaching out the actual target, which is, I hope, making money some fucking day, but it takes a lot of time. And like I told you, it's not a race. You're racing against yourself. So don't put yourself any time limit on whatever target you need to get to into a specific amount of time. Like, I want to be profitable in a year. I mean, fuck that. Go out there with that type of motive. Yeah, that's great. That's the kind of stupid commercial motivation you'll see out there. Like, if you want to be the best, then seek for the better. What the fuck? Really, are you going to be doing this, learning trading? I wish you good luck, because that's all you can count on. It's more likely luck related when you're playing those stupid games. So try to be smart, all right? You're never going to control. The only way to get there is to practice, not to try going simple solutions. Try not to get into the traps. That's the only way, right? Like falling a little once in a while is just absolutely normal. Don't blame yourself. Everyone makes those mistakes. I've been there. You will get there anyway. The only thing is that if you can at least try to pay for these losses, that's great. I mean, you're learning by making mistakes. And most importantly, you're no longer losing money to get to learn those mistakes. And believe me, there are a limited amount of mistakes to make. That's the thing. You're going to feel like, all right, you've got into so many traps so far that there's probably endless traps. I can tell you, yes, there are endless traps, but they're getting less and less often. That's just how it goes. I mean, nowadays, I still fall down some traps, just like Wall Street. Look at the big trap they tell me. They opened right in front of me, and I got straight into it. I just can't. You think you're never going to go down some problems. That's not how it works. You still have problems to face every fucking time. It's just the problems are far less often as you get better at trading. It's just as simple as that. Do I fall some traps? Definitely yes. Just far less often than you will. It's just simple as that, because I've been there before. I've been making those mistakes as well. And yes, it's when you get better that you fall less often. And to get better, you just got to practice and got to be patient. Anyway, that being said, I'm going to wish you guys a pleasant day. See you tomorrow for the MCQ test correction. Just a quick info in here that I wanted to share. Remember that I'm not click hunting or whatever shit that is. It's just like, if you like those MCQ tests, I know some of you guys have a look at the corrections, but you don't participate. Like, you just don't give your answers because you fear of putting bad answers in there or whatever. Just be aware of one thing. The more information you give me, the more precise I can be to teach you what you need. Not what you want, what you actually need. So, even if that means answering the MCQ test and putting bad answers out there, then at least I'll know what to work with. I'll know where to help you and stuff like that. So it's really a win-win situation. Though I'm just saying it out loud because I think it's important. Some of you, I know, don't answer because they fear of giving bad answers. So first of all, I don't give a shit about your answers. I don't think about you on a person-to-person basis. I think about you as a big community. What I care is giving you the best possible content regarding what I can perceive from your own problems. But if you don't give me information, I'm just going to be less precise at doing this. So if you participate, I can be more targeted to what you need. Secondly, if you don't participate, just think of it that way. It is supply and demand. You're demanding stuff, I supply that, all right? The question is, I'm not putting a lot of supply out there so you can pick whatever you think you want, right? Which is what most people do out there, right? They just make a shit ton of things and you pick up whichever you think you need, which is most of the time what you want, but certainly not what you need. I want to target, which means if you're not answering MCQ test, at some point I'm just going to think, all right, maybe that's not the right way to do things. So if you like those MCQ tests, just take a little bit of time to answer them. And like I said, don't focus on giving right or wrong answer. It's certainly not how you'll progress. Simply by participating, you're helping yourself and you're helping me in the same process. All right? Just simple as that. And if you don't like that, then just don't answer them. It's no big deal. Just like I said, there's plenty of way I can communicate with you and teach you some stuff. So if MCQ test is not the best way, then you can tell me. I mean, even if you have IDs of stuff, I can teach you, or all right, just share it with me. I mean, if you have any possible idea of how to make this community better, any other way I can communicate with you in a better way, then just share your ideas. If I think they're worth it, I'll definitely try them out. It's simple as that. I think MCQ test is a good way, but if you have a better one in mind, really feel free to share. Anyway, that being said, bye guys. Don't forget that even if we make the correction tomorrow, you can still answer today. All right? And I'll leave them open-ended in time, which means you can always answer previous MCQ tests as well. Like if you just came to me a few weeks ago or something like that, I mean, there's always four MCQ tests, and you can answer them, obviously, even if that means afterwards. Though obviously do it smart. Don't have a look at the MCQ test correction and answer afterwards. That would be stupid. It's just try to answer and then eventually review your answers. The MCQ test corrections will remain out there, obviously, forever as well. Bye, guys. See you tomorrow.